I think one of the biggest things that brands can do is unexpected surprises. And that's redundant, but if you can do something unexpected that delights your customer and gives them value, you will have under-promised and over-delivered in a huge way, and folks will remember that.
Welcome to the Service Experience Podcast. My name is Yoni Lavi. I'm the CEO of QTrack, and this show is where we talk with leaders about the in-person service experience. Most companies have digitalized their online channels, but the physical visits is still a blind spot. We explore how leaders are turning that blind spot into an advantage, using real-time data and creating a higher value experience both for customers and the associate. Welcome to the Service Experience Podcast. My name is Yoni Lavi. I'm the CEO of QTrack. Today I'm joined by Dan Latimore, Head of Research for North America at RFI Global. Dan looks at how customer behavior, technology, and the operating reality inside financial institutions are changing. Dan, great to have you here.
Thanks for having me on.
Awesome. So before we start talking about branches, financial institutions, I'd love to know a little bit more about your background. I did a little bit of research. It's quite fascinating. You were in New York, Tokyo, London, Merrill Lynch, McKinsey. Can you tell us a little bit more?
Sure. I've been in financial services my whole career, and what is great about being at RFI Global is that I get to bring all these different experiences as a consultant, as a practitioner, as a researcher to bear on something that has really interested me for a long time, which is just consumer behavior. And as we go out and talk to consumers in depth about the incredible forces that are buffeting them today, getting a look into their heads right now is just fascinating. So I'm like a kid in a candy store.
What is it about behavior, specifically in financial institutions or in the banking sector, that fascinates you?
Well, I've had this long-standing interest in behavioral economics, behavioral finance, and why it is that we act like people. And we don't always make rational decisions. We make decisions based on emotion and based on feelings. And feelings are something that money in particular really kicks up a lot of. And it's something that, at least in the US culture, people are often pretty hesitant to talk about. So getting behind their motivations to what drives them as they interact with money is just something that gives me new insights, new surprises every day.
That's very insightful. And I think that's a great segue too, because as human beings are predictably irrational and even more emotional when it comes to their money, that kind of gives a good segue into what is the purpose of the branch. Because when we're feeling this way, we do have the call center, we do have mobile banking. Why do we still go to branches? Is there some key that unlocks kind of that behavior there?
There is, and we are no longer going to branches for servicing. We are going to branches for much higher stake moments when something has gone wrong, when we need advice or reassurance about a big choice that we're going to make, or when we need some kind of affirmation through very human interaction.
Mm-hmm.
We're going there when we need to talk to someone.
I agree. In fact, our last guest, very last episode spoke exactly about this kind of U-turn that branch closures are making into branch openings, specifically for this reason, the importance of human interactions to cultivate trust, to give advice, and like you said, to solve for these kind of high stake moments in someone's financial kind of journey. To that end, what does a branch look like 5 years from now if we're piggybacking on what you said?
And some institutions are already starting and have been for a while to call their branches stores. And so it is a place, again, not to process transactions, but to showcase products and to give advice and to foster that human to human interaction. In our one of our pieces of data shows that only 4% of respondents said that going to a branch was never necessary. So I think of it as you may not need a branch very often, but when you do, you really need it. And so that branch of the future, which is a term that's been around for at least a generation, but today's future branch is going to be much more of a welcoming place where you can get answers and guidance and reassurance about those big decisions in your financial life.
Agreed. And one of the things we hear a lot about, and I'll use the word store because I've heard that from our clients as well. Um, what's a typical journey or funnel look like? What we're seeing is very often it does start through mobile banking. It does start through call center. There's some kind of roadblock. Then they come into the branch to maybe complete something or to maybe, like you said, affirm a decision they're making. Can you walk me through as you understand what a typical journey looks like and kind of follow up? What should branches know about customers when they walk in and what do they not know?
Let me take that second part first. And what they should know is everything that has happened between them and the bank already. There's obviously a big gap there, and it's something that a lot of the banks we talk to are trying to address right now with varying degrees of success because it is hard, it is dependent on the tech stack, and it just takes a while to make it happen. But what gets them into the branch, and this is really interesting, we've just gotten data back from field around artificial intelligence. Very often now, what's happening is that the journey for finding a new financial product doesn't even start with a bank. So it's not like B of A is being compared to Chase is being compared to Citi. It's that and by their websites, it's that someone will go to ChatGPT or Claude and say, I need to get an auto loan. What do I do and what are my best alternatives? And that starts to be the top of a completely new funnel.
Yes.
And so for banks, that poses a whole new set of challenges.
Completely agreed. I think I saw some interesting stat that 40 or 50% of consumers already prompt financial information into the various LLMs and use it for some kind of financial advice.
Yeah, our latest data shows that 61% of consumers in the
61%.
US have used an LLM for some kind of financial advice, although it's very spread out across those different sorts of functions. So none of them had more than about 25% usage, and none of them had a huge spike. So different people are trying different things right now, and it's an area where things are changing incredibly rapidly.
Agreed. And I think your study said that 53% worry about losing the human interaction, which is kind of, it's a double edged because we have so much power with AI. Is it because of the power of AI that we crave even more human interaction? Or did we always crave human interaction and it's just an emphasis now?
I think it varies by person, and there's definitely this need for affirmation. In some senses, you think about it with self-driving cars, the accident rate is lower for self-driving cars on a per capita basis. Yet, whenever an accident happens, as they inevitably will, we go looking hard for root causes and blame the self-driving car, even though it's much less likely to make an error than a human driver. I think in AI, there is still not perfect financial advice, and consumers, particularly for high stakes interactions, want that reassurance of being able to look someone in the eye and get a sense of what's really going on, even if that customer service rep or that salesperson is AI assisted themselves.
So, Dan, I know a lot of FIs are lucky to work with you, and I'll give you kind of a little side story and then we can bring it back to banking. But my family, my wife, our wallet gets split through grocery like 10 different ways. We get some things from Target, some things from Amazon, some things from Whole Foods. And I think banking and financial products used to be you pick a brand and you stay with that brand. What we're seeing is that more than ever before, your financial wallet gets split a dozen different ways. And it's probably going to get worse because when you start your journey on an LLM and you say, what's the best process to get a car loan? It's going to give you various options and you can already price shop. So back to you, how does a brand become competitive and capture more share of wallet and not just be transactional?
That is really the heart of the question. And um, in some senses, I think brands are going to have to decide where are we going to compete on rate. And on a lot of lending products, rate is the key differentiator. Um, and where is it that our service and our brand and our relationship can be a differentiator so we don't have to join that race to the bottom on lowering margins. And to do that, I think one of the biggest things that brands can do is unexpected surprises. And that's redundant, but if you can do something unexpected that delights your customer and gives them value, you will have underpromised and over-delivered in a huge way, and folks will remember that. One of my personal ideas is that you've got moments where customers are in distress and really need help, and you can either step up and help them out, and that will be remembered in some cases forever, or you can step back and play by the strict rules that you've got in place and potentially lose them when they get back on their feet.
I love that. And I'm sure that can materialize in various channels. But behind that, it sounds like uh, don't step over $100 bills to get pennies when it comes to the customer LTV. If you can eat a little bit of margin today, it might extend your lifetime value of that customer.
Yeah, exactly. Which is very hard to do because executives are focused on the quarter and the year,
Yeah,
not
yeah,
5 years down the road.
right. And it's, you got to have a strong playbook for that.
Yeah.
So let's talk a little bit about the people in branches. Uh, we know that we need AI to continue to deliver excellence in this entire space. Where do the people in branches fit in all that?
Well, it's interesting to look at folks in branches because very often you've got some of your lowest paid folks being out there as your frontline representatives, being the face of your bank to your customers day after day. And that presents something of a challenge. So you've got to give them the tools, many of which are now AI empowered. So rather than having them go through many different menus to get to their answer, can you put an AI interface in so that they can get the right answer quickly from all of this data that the bank has available? And getting them up to speed on that as well will be helpful. Uh, the the ways of measuring how well those folks in a branch do their job is also going to change. So no longer is it how many errors did you avoid or how many customers did you process. It's how many sales did you make or what is your retention record. And also just how generally does your customer feel. And those are in many ways a lot harder to measure than some of those more concrete metrics from yesterday.
I agree. And data is key. Overcoming this problem of data silos, I think, is key because if we overcome that and you get a clear picture on the customer, their expressed intent, where they're in their journey, you can give a very nicely curated playbook to a frontline advisor. And maybe even if they're a bit junior, someone can certainly go through a well documented playbook.
Yep, exactly.
So, in all of your research, what were some things maybe in the past year or something current that really surprised you?
We asked people how they felt about visiting a branch. Um, and what surprised me was that only 10% of respondents expressed any kind of negativity, whether it was being frustrated or inconvenienced or being anxious or uncomfortable. And that, to me, points to an opening for banks. You've got customers coming into your branch, um, and even if it's to solve a problem, they say they're coming in to be reassured or because they do want to see someone face to face. So when you've got them in there, take advantage of that opportunity. Take advantage of that safe space, because that notion of being reassured was something, frankly, that surprised me quite a bit.
Yes. I'll give you an interesting stat. I work with a very large North American bank, and we track how many customers come in every branch for service and ultimately never get served. We call that an abandon. Pretty kind of standard term in retail. 50% of their banking clients that abandon over the course of a year abandoned when opening a new account. Yeah. So I'm sure your wheels are spinning there. So it's funny because I think that's a very important metric. Obviously, opening a new account should be very critical, even if it's maybe low value compared to other services. It opens up the entire journey. Um, Abandoning when opening a new account is the surest way to send your potential customer to another brand. So it's interesting because maybe the client isn't always the best narrator. Sometimes they are, sometimes they're not. Sometimes they're the data tells you how they voted with their dollars.
Yeah, that's a fascinating stat. And I'd have to process that.
Great. Um, One more question here. If you could give every retail bank CEO one piece of advice about maybe overarching strategy, but then strategy in the branch slash store for the next 5 years, what would that be?
So these branch interactions now have become less frequent, but more important. So take advantage of them. As I said, customers don't need a branch that often, but when they do need it, they really need it. And this is your opportunity as a bank to shine in those high stake moments. Take advantage of the trust they've got in you to deliver on their specific request, but also build that broader relationship, because you don't get that chance very often.
Agreed. Agreed. And out of curiosity, is there a CEO, CX leader that has helped shape some of your really fascinating ideas?
It's a variety of conversations we have with our clients, most of whom like to be kept confidential, but there's great thinking going on in this, and um, I think we're going to continue to see the branch evolve around the country, um, probably with some very specific market oriented or orientation towards specific market needs that will shape experiences.
Awesome. Well, Dan, that was really fascinating. Thank you so much for your time. That was a great conversation.
Thank you, Yoni. My pleasure.
Thanks for listening to the Service Experience Podcast. If you want to see how we're helping leaders close that in-person blind spot, fueling sharper decisions and greater value for customers and the enterprise, visit qtrack.com.